Hey guys, welcome to QuantLab. QuantLab में आपका स्वागत है. This is the first video of the year 2025, and most people are under the belief that 2025 year is not going to be like a super bumper year, but rather a more conservative year, and kind of market might aggregate. There might be periods of high volatility and whatnot. This is backed by some investment theses. And what I'm going to share right now, or in fact, what I am already sharing on the screen, is just picking on some readings that I have done in the past few weeks as to where market is, and looking at a couple of more projections with respect to country, uh, why, where, what are the different sectors and all that. So there are a lot of articles like this. If you look at it, like economy is on track to reach 6.5%, hit 7%. GDP was low probably in 2024, and all of that. A lot of consumer spending has also come down, while certain different segments like luxury segments and all have propelled up. So the fact that rich are getting richer is becoming true. Also, the past 2 years have given decent returns, and by decent I mean Nifty is somewhere about 12-13% easily. So a lot of the data that I'm going to talk about is from a macro perspective, a long-term horizon perspective as to what could happen in market. This is in no way a market recommendation. You guys know that I don't do that. Some of this is driven by my own analysis. Some of this is driven by few limited YouTube channels that I follow and subscribe towards. You know, I don't want to say that the content is copied, but like for instance, Akshat is somebody I follow. I think his style of macro resonates a lot. So some of the recommendations are definitely picked from his videos. I think you guys will realize that if you have seen it. And then some of it is backed by data, some of it is actually my own portfolio and things like that. So if you actually scan these sort of articles where there's ideas like long commentary about what sectors are there, what segments are picking up, etc., you can consolidate all of that and probably come to the same conclusion. I have just tried to do that for you. It's not a very rocket science डेटा. सम ऑफ इट इज़ कंडेंस्ड बाय लार्ज लैंग्वेज मॉडल्स, मतलब चैट जीपीटी को यूज़ कर लिया ब्यूटिफाई करने के लिए. दिस इज़ लाइक आई वाज ट्राइंग टू ले डाउन हाउ am I thinking about 2025, and what are the different sectors I'm looking at putting money in, uh, cash hold karna, etc., etc. So basically this is just an insight and a conversation about it. So one of the key things that we need to see is that there will be private consumption which will be driven specifically in certain segments, discretionary segments like retail, automotive. Maybe there's specific categories, like if you see the EV category that has been being talked about. And if you listen to seasoned investor like even I think Nitin or Nikin Kamath, he has talked about energy transition industry. So EV is already a hot industry. So two-wheeler industries, retail industries, automotive two-wheeler specifically, not the overall automotive, they could have some sort of expansion happening. Now this expansion could come in either from a PE perspective or just demand perspective, all of that. It's very difficult to gauge the valuation and PE of these stocks, because some of these are very new industries, तो benchmark कर पाना बहुत मुश्किल हो जाता है. Government based sectors, I don't know. I think there will be a lot of push towards home loan and consumer finance, because the rates are still growing. The real estate segments is probably at an all-time high. Real estate is booming. There's a lot of money pouring in. Again, booming not from across, but speaking from a metro or tier 1, tier 2 cities. So a lot of real estate projects are coming and lending has not gone down. So there's a potential that there might be some rate cuts or not, probably January or February. So again, this is more driven from private consumption. Interest rate trends, there can be a potential interest rate reduction which could further enhance the lending category. Like if rate comes down, people take more loans, that could be value. And certain companies which are nicely positioned towards supporting lending, that could always come into picture. Money supply and inflation, there's a lot of different I would say stocks that can benefit, let's say for instance, a higher tier city, like a tier 2 or a tier 3 city compared to a rural city. So the impact of inflation would come on to companies, and certain companies would try to find different sort of business models. Like for instance, a good example of this sort of trend, not really supply and inflation, is Asian Paints. If you notice, Asian Paints as a company, it was a completely paint company, and now they are venturing and branching into segments like home furnishing, interiors, even going down and selling rugs, tying out with different sort of service providers and whatnot. So that segment is growing because obviously there is demand for it. Now what happens to that business, don't know, very difficult to comment, but a lot of it is driven by demand and ability to spend. But at the same time, some of areas like rural areas are affected because of certain commodities or certain elements are costlier. So they, like, this is more FMCG. Currency depreciation, I think, mitigating risk. The only point is you can buy some sort of a hedge against it. You either hedge it against a different currency, which is actually becoming very difficult these days, or you hedge against something more tangible like gold or metals. Some of the typical trading strategy, I wouldn't go say that this is more like a buy or sell recommendation or anything like that, but it's basically that there would be more, it would be more sensible to try to monitor a market and look at strategic points to deploy cash rather than going SIP, because the market could be aggregating. For instance, right now, or at the time of this recording, probably Nifty was somewhere around 14 or 13%, somewhere around that from the top. So maybe it makes sense to put in a little bit of cash right now. But if this would go higher, I will not probably worry about. But if it goes further down, like if I put in money right now and if it further down, then I'll double down. So that sort of cash deployment is something what I'm thinking or planning. Again, it depends on how much cash you have at hand and things like that. Sectorial rotation, looking at different cycles, because once rate cuts happens, private banks, consumer lending, uh, and further tier 2 industries or level 2 industries which are affected by this, like automotive, because काफ़ी loans जाता है वहाँ पे auto segment में, they could see some sort of I think growth possibly. So that could be their cash hedging strategy. I already talked about. International diversification is really for the people who want to grow out of Indian market. Like assuming you have already diversified in India, you have well diversified, large cap, small cap, mid cap, अनलिस्टेड स्टॉक्स हो गया, रियल एस्टेट हो गया, गोल्ड हो गया, बॉन्ड हो गया, ऑप्शन हो गया, सब हो गया, सब कर लो, तो फिर इंटरनेशनल डाइवर्सिफिकेशन करो. Irrespective, I think international diversification at this point in time is good, but there has to be some sort of a trading capital to support it. It will be very difficult to put into US market with like 50,000 rupees. So that also comes into picture. Quality and value, I think, just standard point. I don't know how I captured it, but things like let's say Hindustan Unilever, right now it's running at 14-15% low, and that's a company which is never going to tank down, right? It's a very strong business. It's going to be it'll control your portfolio downward movement by a lot of percentage if you have averaged it well. And from the market rate at which it is right now, you can easily look at CAGR 12-13% maybe 2-3 years down the line. So those sort of assets, specific sectors, private banks, two-wheelers, already talked about. Cybersecurity more across the globe rather than anything. And why cybersecurity is because AI is becoming big, and as AI becomes big, a lot of definitions around safety are getting rewritten. So typical trends are getting rewritten. So it's a very good trend to pick up. Consumer lending already talked about. AMCs will also grow because as the market grows, asset management companies will also grow. We already see a lot of new mutual fund players in the market, but yeah, this is just an expansion of that. Stocks to watch, large cap leaders never go out. I think पिछले 2-3 साल में mid cap, small cap ठीक ठाक निकल गया. There, I don't know if I will call it a rally or not, but it was good. So you can look at large cap to build some sort of a resilience in your portfolio. And finally, sectors to avoid. I think PSUs in general, I'm trying to avoid this year because this is the third term uh, the taxation structure has been already not super favorable in terms of traders and investors, LTCG increase and whatnot. So don't know how government is gonna react and control. If the government is not pumping funds like it was pumping funds before into something like railways, or RFC saw railway stocks saw good gain, it might be hard to get into this area. Plus globally also there are certain sectors which might take a hit, like Trump is not very pro climate change and all of that. So sectors which could be like solar or wind or alternate energy, these could probably take a little bit of dent. Sideways, yes, I think I started having this conversation, and tax implications are always there. Knowledge enhancements, finally. I think I cannot comment on this point any further than this, that keep learning, keep trying to understand what can help you make money. There's all sorts of people who are able to go into trade and do whatnot, but sure, I think knowledge would always help. And with that, I think I should have called this that I'll make a book. This is something I picked very recently. It's Elliott's wave principle. I think it's the Fibonacci or whatever sections we have. I have actually no idea on this concept. So I am gonna start to look at this, and if you are interested in Elliott's wave theory, I'm gonna be trying to code this out and probably run some live series as well. All right. So if you are interested, please subscribe to this video. Please like, share, comment, blah, blah, blah. Bye-bye. Until next video, this is Akash signing off.